Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for the third day of our Precious Metals and Critical Minerals Conference. The next presentation is from West Red Lake Gold. Please note you may submit questions for the presenter in the box to the left of the slide, and you can view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I'm very pleased to welcome Shane Williams. He's the President and Chief Executive Officer of West Red Lake Gold Mines, which trades on the OTCQX Best Market under the symbol WRLGF and on the TSXV under the symbol WRLG. Welcome, Shane.
It's great to be on. Thank you very much. Welcome, everybody. So my name is Shane Williams, President and CEO of West Red Lake Gold Mines. So I'm just going to walk through a little bit of we are the newest high-grade gold mine in Canada. We just recently went into production, so it's a great time to be producing gold in the current market. So I am going to do some forward-looking statements. So I have some forward-looking statements information. And so here is basically our main story for West Red Lake Gold Mines. We just recently went into production. We are the newest gold mine in Canada. This year in Canada, there's very few new gold mines going into production. So we have been on a journey for the last 2 years, really. We bought an asset. We've done a lot of the work on it. We recently done a big bulk sample earlier last year, which kind of validated the last 3 years of work, which was mainly drilling. We started the mine in June of last year, really, and started the ramp up. We started to ramp up, increase the pace, finish some key projects. And then by January of this year, we went into commercial production. You can see sort of some of the high level numbers there. You know, for the full year 2025 on ramp up, we produced about 20,000 ounces of gold. Remember, that was only a half year. We started it in June and we started to ramp up. So, and you can see for the ounces poured in the quarter of 25, we were at over 7,000 ounces. More importantly, you can see, as we said, it's a great time to be starting a gold mine. You can see the sort of average sale prices over that period and the sort of revenue we're generating with those sort of numbers. Again, I talked a little bit about the bulk sample. Previously, the previous operators of this asset had some challenges with the gold and the reconciliation of the resource model. But the work we've done really has kind of proven that we've kind of got the model correctly. We've done over 160,000 meters of drilling as over on this deposit. And we really did a bulk sample earlier this year, which really validated the work the team have done and barely reconcile the model very well. And what you're seeing here is the model is in the blue. So that's when we have our resource model, what the sort of, we mined a number of stopes. So we mined a number of different mining areas across the deposit. And you can see sort of what the model said we would get on ounces and what we actually got. We ran it through the mill, we produced it, which really shows to me and the team that we've got the model right. With that in place, we did a pre-feasibility study and we launched the project back into restart. And then what we have now is what is left on restart. So we've gone into commercial production. The next plan now is to get the full run rate. You know, our mill does about 800 tons a day. Commercial production, we were at around 600, 650 tons a day. So we really have let's just say another 6 months of ramp up. Probably be the back half of this year, Q3 and Q4, when we're in full run rate. And we have a number of different milestones still to meet coming up. We are obviously doing the shaft. We have a shaft on this project, which we're fixing at the moment, which needs to be done. We have another property called the Rowan property, which is really within about 70 kilometers of the Madsen. And this is about creating the hub and spoke model, which I'll talk a little bit about later, where we're doing an updated resource on our Rowan property. We're putting together a study with Rowan and Matson together. We did a pre-feasibility study last year on the Matson project, but really we're now adding in the Rowan project, which is a near-term growth opportunity. We have another deposit called a Fork deposit, which is again within that region. And the idea is then we're working on permitting, and then we're advancing the project to be this combined sort of both projects together running through the Matson mill. And we can see a pathway to 120 to 140,000 ounces a year over the next number of years. Here's really the real opportunity here. You know, when we started this project, really the opportunity was that we kind of had a view that the gold was going to rise. You must go back to 2029, really when we to 2019 when we started this project, and we saw the opportunity. Myself and Frank Justra, who is one of our main shareholders, got together. He had a big view on gold, where it was heading, and really the idea was, you know, there's lots of projects out there, but you really want to be buying a project and moving a project into production. And you can see that sort of leverage that you get to as you move with gold price. You can see the GDXJ, the GDX, which are really the benchmarks for gold producers. But you can see where you get the producers moving into growth and the producers re-rating to developers. You can really see that sort of leverage to that gold price as it moves over the 12 months. And we're just starting on that journey, really. We've just moved into production in January, and we're just beginning to see that re-rating. We haven't moved at all, and as over the next 6 months, 12 months, as we re-rate, we will see that sort of leverage and upside to gold price. So again, the value considerations I talked about, we are very, very undervalued for sort of our peers, where we sit in the curve against our other peers. You can see our peers there, but I think we're kind of a wait and see story. You know, if I go back 12 months, everybody said, well, this was a failed asset. We will never get it back into production. Now we're back into production. We've gone into commercial production, and now we're going in ramp up. And I would say over the next 6 to 12 months, we will see that re-rating as we begin to deliver on quarterly production and move forward and get to that full run rate. Again, I wanted to talk, we're in the Red Lake region of Ontario, a very, very high grade area in Red Lake, produced a lot of gold historically. We have really, this mine has been a brownfield mine. It has produced over 2 million ounces back at 10 grams. So back in the 50s to 70s, this mine operated. Remember, gold price was around that $100 an ounce sort of area. We bought the mine in June 23. We've really done 2 years of drilling. We've done over 90 kilometers of drilling underground. We've done a pre-feasibility. We've done a lot of infrastructure in the project. We've done a lot of underground development. And then we restarted the mine, basically. We've added a lot of equipment, etc. And the benefit now is ramp up has started, and we're moving towards that 50,000 to 60,000 ounce a year production as we grow Matson. I just want to highlight on the map there, our other property, which is the Rowan property, which is a property where we own also, and we're developing at the moment, and we're drilling. We're going into permitting. And really the concept is to bring sort of the hub and spoke together. Our mill in Red Lake, we have a mill, it's permitted for 800 tons a day, but it can actually do up to 1,500 tons a day with some small capital. We're running it, as an example, today we're running it at 1,000 tons a day. So it has lots of capacity in the region. And the real concept here is to create this hub and spoke model in Red Lake. Rowan will be brought, the material from Rowan, which is high grade, it's around 9 gram material, to bring it into the Matson mine to sweeten the grade up and then get that ounce profile up. And that's really the bigger concept here that we're developing over time. I'm just going to jump back a little bit to some of the technical approaches we've taken. I'm not going to jump into too much technical, but really the key to unlocking this project was the amount of drilling we've done. we've completed over 160, and now it's closer to 200,000 meters since we put this in place. And really that has allowed us to define, this is very, very tightly spaced drilling. Up to now, it's only been drilled at 20 to 25 meters. And so we've really tightened this drilling up to around 7 meters. So that's very, very tight drilling, a lot of drilling. But what that allows us to understand is the ore body, get a good understanding of the ore body, where the ore body is, and really define that. And the process really in these high-grade underground ore bodies is that 2 or 3 drills will be working life of mine ahead of the project, ahead of the mining, well ahead of the mining, to allow us to get that data, feed it back into the mine plan, and then develop that into a mine plan. Again, I touched on this a little bit, but again, our bulk sample, people say, well, the ore body was an issue. How have we solved that? Really, we've solved that through the drilling I talked about. But as you can see there, we mined stopes in different areas of the ore body. We didn't just go to one area and say, okay, well, let's just test that area. We mined at 3 different areas, and we mined over 15,000 tons of material. And so what we found is that when what we predicted in our model, what we got actually from the mine, we mined it, we put it through our mill, we did a full reconciliation on the mill to ore body. And what we found is that it's very, very good reconciliation, excellent reconciliation through the mill. And that gave us the confidence that the work we're doing, the drilling, the development, is all beginning to work. And so based on that, we also did a pre-feasibility study, and then we used that as a launch pad to launch the project back in June of last year, and then slowly ramped up to where we are today in commercial production. Again, as well as that drilling and that detail, we also did a number of capital projects. Historically, the previous operators, one of their challenge was movement of ore. And so as you can see, the mine has 2 portals, the west and the east portal, and they were never connected. And so what that means is you're moving ore from one part of the mine up onto surface. You can see where the mill is located, and then moving it across a number of areas, trucking it along surface into the mill. And so one of the projects we saw for efficiency was we connected the 2 parts of the mine with our connection drift. And that was completed mid last year. And so that really opens up the opportunity for efficiency. We can put bigger trucks on the ground. The previous operators were not able to haul 24/7. We can haul material 24/7. We can move material. We can move people across the mine. It makes a lot of efficiency in the mine. You can also, one of the other things is dewatering. This mine was flooded historically. We've dewatered the mine completely all the way down to level 17 now. We're down about 800 meters. To give you an example, the full shaft that's on the project goes down to 1,200 meters. So we're well over 50% of that dewatered, which really opens up the mining at depth, which has never really been mined before, which allows where most of the high grade is sitting. We also added some facilities, a new camp facilities, a new dry, and new facilities. So we've really revamped the project from what it was into setting it up to be an efficient operation. Again, this is a real opportunity on a project that we haven't really talked about that much, but when we bought the property right back remember we bought this property, I bought it, me and Frank put together a deal. There's been $350 million spent on this project. Back in 2023, we did a deal and we bought it for $6 million. So that's really pennies on the dollar. When you think about it, there was $350 million Canadian dollars spent on this project. And there's also $170 million worth of tax losses. So that's well over $500 million of value in this project. And we bought it for $6 million, basically. It's why we did it. Now, gold was in a much different place in that period. I don't think today you'd buy this sort of a mine, but it allowed us to get that opportunity. But the key opportunity is our shaft. We have a shaft on the property. And so this is a shaft that goes all the way down to 1,200 meters. So this really is a game changer for the mine. At the moment, we're trucking ore up from the depth. But once we get this shaft in place and running, This allows us to shaft and skip a lot of material from up ground. We can go up to 2,000 tons a day. So this is a game changer. It was one of the things when I went down to buy this, Brian, I looked at it. It was a very good shaft. It's in good condition. We've been renovating that for the last 12 months. And so we're in a position now in Q1 to start hauling material from that. And then that's phase one. And then by phase two of the mine, we'll be able to get to that 2,000 tons a day. So that's really, from a cost perspective, that's really a game changer from a cost perspective of the project. Again, people look at our pre-feasibility and study and go, but you got to remember when we did the pre-feasibility, we used it seems ridiculous now at the time, but we built a mine plan on $1,680 gold. You know, this is compared to where gold is now. And the mine was always seen as a high grade, narrow vein, small remnant mine, you know, and that was the perception out there. But what we've seen is as we've gone in and mined these and drilled these areas, we found that every area we've gone into as we've drilled this process has got bigger. And this is just an example of it. 4447, which is one of our main complexes, we were drilling that all in 2025. And people can go back and see sort of the drill results. Spectacular drill results, very, very high grade. But more importantly, were good widths in meters. So that really allows every area we've gone into, we're beginning to build the inventory, build it, make it bigger, and the grade comes up. So that's really the possibility as we go in. And so as we build and use those higher gold prices, we're finding that. So that's really an upside. We are doing a pre-feasibility study this year, which will bring Madsen and Rowan together. And so we will, at that stage, get to use a higher gold price, which means the cutoff grade comes lower, which means the tonnage goes up, which means the ounce profile. So that's really a game changer for the whole Red Lake region of Madsen. And this is really, I talked about this high-grade South Austin area, and this is the South Austin area. And you can see here, we drilled that last year. We'll be mining this area probably in Q2 of this year. Usually it takes about a year between drilling, 6 months to a year. By the time you drill it off, get it defined, put it into a mine plan, get the access in there and drill it. So this is one area now that we're drilled all last year that we're just beginning to move into in Q2 of this year. And you can see some spectacular grades. But more importantly, it's over, for me as a running with the mine, it's over strong widths. You can see very, very strong widths, which build the tonnage, which build the grade over time. So that's very exciting as we get in to mine that area in Q2. Again, I'm just where we were with the pre-feasibility, how we really build that value over time. I talked a lot about all the drilling we've done and how that's translating into larger stopes and building up the tonnage and building up the areas to mine. We also have another area that I'll get into called our Fork deposit. This is again a small satellite deposit which is close by to the Madsen mine, very close. We're beginning to develop there, and really in 27 that area comes into the project, which is a non-remnant area, brand new mining area, a lot of opportunity to grow. We also have a Rowan deposit, which we put out a PEA last year, which will produce around 35,000 ounces a year. And that material will be fed into the Rowan, into the Madsen mill. And then we have, as we grow, we have drilling potential on the project. So a lot of upside to come over the next 12 months, which if I go back to my original slide, showed about that re-rating for West Red Lake as we move forward in this stage. Again, this is a little bit of our fork I talked about. As you can see, this is within 200 meters of our existing development. It's a brand new area. You can see we've drilled this area. Again, very high grade area, very close to the surface, very close to mining and open at depth. And so this allows us to bring this material in. And you know, people say, oh, Madsen, it's deep. How are you going to mine it? The real concept here is to have a number of satellite areas being mined in parallel and being put together that all feeding into the Madsen mill. Fork is just one of those opportunities. You can see there in the bottom left of my side, where this fork deposit here, we're building a ramp in, and how we bring that material, non-remnant, into the Madsen area and into the Madsen mill, which allows the Madsen mine to grow over time. It's really another concept, the same as Rowan. It's a satellite deposit which feeds into the Madsen project. Again, Rowan, this is another one I talked about. Rowan is a high-grade deposit. You can see the sort of grades we're getting on Rowan. 12 grams, 200,000 ounces at 12 grams, and so there's over nearly 400,000 ounces of gold around that, call it that 10 grams. And again, non-remnant area, not been mined before, very, very core, high-grade core. And we're actually drilling that today as we speak. It's open at depth. We've only drilled it down to 400 meters. These systems, remember, these systems in Red Lake go very deep. Evolution, which is our neighbor, they're mining down to 3,000 meters. So these systems go very deep. We have drill holes that show that Rowan go deep. So again, this is another opportunity that allows us to drill this area, mine this area, and bring this material into Madsen. So if you think of the concept now, we'll have 3 different mines. We'll have Fork, Madsen, and Rowan on the go, all being mined together, being brought into the Madsen mill. We can expand the Madsen mill and then grow the project over time. A little bit more then on Madsen. So Madsen is a fantastic ore body. It goes, you can see, I talked about that 4447. I talked about the 904 area where we are today. That's where we're mining today, just to give people some reference. But you can see the depth of the ore body. It goes a lot deeper, and we're getting very, very high grade as we go deeper, way down deeper. We have some seismic structural imagery that show that this trend goes all the way down to 2 kilometers. The bottom of the shaft there where the fork is 1.2 kilometers, but we have data that goes all the way down. So this ore body is a long life, and we have a long way to go before we mine out this. Remember, we're only at that 4447 now next year. So lots of areas down there. The other one I point out is the 8 zone. So the 8 zone is the high-grade zone in here. We have 150,000 ounces at the moment defined on this ore body at 15 grams, and it is open at depth. So again, deep down in these systems is where you find these high-grade pods effectively in the ore body. Again, I've talked a little bit about 4447, but another area that's becoming exciting is this 904 area, which is just down here at the bottom of Austin. And so this is another area very similar to 4447 that we're just beginning to get into now. Very, very high grade pod. We're just starting to drill that now this year. And so we see this as another 4447 area. And as we get into this, develop it, this really comes into the plan in 2027. So again, 4447 is the majority of 2026, and this 904 area will grow and become into 27. So we're really building that long-term inventory on the project. It's a very high-grade area. You can see very high-grade, good, very mineable widths in that area again. This is where I'm talking about. It's right down here, this 904 complex. Again, the idea is this would create another high-grade pod. And more importantly, it's unmined. This has never been mined before. This is non-remnant area. This is brand new area. Again, it came from our discussions with some of the old-timers there who left this area alone. We know it's high-grade. We have a lot of data in that area. But again, non-remnant allows us to mine much more efficient. I'm just going to jump through just so I can leave some question time. Again, across the deposit, lots of opportunity. We have a 47 square kilometers of area within that area. And also, we have lots of showings across that deposit and old mines. There's a number of old mines across our property that we haven't really managed to look at yet. And so over time, as we do that, we're beginning to find. One of these is an upper 8 zone. You can see where the lower 8 zone is there. Last year, we discovered an area called the upper 8 zone, which we believe is an upward trend of the lower 8 zone. And we just discovered that last year, got some very, very high-grade hits at that area. I'm just waiting for just going to talk about our management team. Again, we've put in place a management team. I've done 5 of these restarts now over the year. This is one of my areas. I've done a lot of these restarts, buying these mines, old mines, and turning them around. Our team has all worked in operations. We're an operationally focused team. Our big vision here is to build a mid-tier producer, get Matson going, bring in Rowan, bring in these satellite deposits, really to grow to this. We can see in Red Lake 150,000 ounce, a pathway to 150,000 ounces a year, potential in this area. And then we use that as a pivot to grow M&A as we move forward. And so again, our share structure, we've a lot of warrants, as you can see, a lot of warrants outstanding, all in the money at the moment. So that's a lot of cash to come in over the next number of years into the project. They're all well in the money at the moment. And so what I will do now is we have some very strong liquidity. So we have one of the strongest liquidities out there in the market compared to our peers, which allows, from an institutional point of view, we're beginning to attract the institutions in with sort of that liquidity opportunity. What I'm going to do now, that's the end of the presentation. I will open it up to questions a little bit, so that I'll just go back to some of the questions there that are there. So one of the questions is, can the mill be used for process ore from other deposits? Yes, as I spoke about, the mill is running at 800 tons a day, but the mill can be up to 1,500 tons a day with very little capex associated with it. So that gives the opportunity to really double the size of the mill and bring in. An example of that is Rowan is an example of that, Fork is an example of that, and other deposits in the region. And so talk about the path, another question about the pathway. So we have, as we said, the mill has been running 1,000 tons a day. I've ran at 1,000 tons a day over the last couple of weeks. So there's about a $30 million of capex. It needs a new ball mill, some more leach tanks, some more Nelson concentrators, but it's really small. It doesn't need to be doubled in size. It doesn't need a new building. It doesn't need that. And some work needs to be done on tailings and water treatment. And so that's been estimated around $40 million of capex, but that allows us to put that in to grow the mine to 1,500 tons a day. Another question is, 904 drill results will be in a couple of weeks. We have the first set of drill results now. So I suspect in advance of PDAC, which is in early March, we will have our first drill results of that 904 area. It's when we're looking at getting those 904 drill results out. We will be doing more. We will also be, now we're in the production, we'll be doing more of a quarterly production update, like most companies, but we will be doing an update probably in March on overall how the quarter is going, etc. I'm just running through the questions here quickly. So at this stage, we will be doing guidance at the end of Q1, sort of where we're going, and we'll do an update in March, but we will be giving guidance in at the end of Q1. So there was no bottlenecks really. It was the mining, the ramp up of the mining was what we needed to get up to speed, and that has been now solved. And as we ramp up this year, there's no bottlenecks in the mill at the moment. The mill is never the issue. It's more getting the mining and getting the shaft, as I spoke about, and getting all those sequences in place. Drill results from 904 will come in just before PDAC. We're hoping to have our first 904 drill results out, and they will also be for the rest of probably for the first half of this year. We're drilling down in that ore body at the moment. So the capex associated with Rowan and to fund Matson ramp up, we have the cash we need. We have $46 million on our balance sheet. And as I said, we have all those warrants that are in the money that hopefully will come in over the next 6 months. Some of them are due in May of this year, more in November. So that allows us to ramp up the mill. And and Fork development. Rowan, we have permitting to go through, so we have some time with Rowan before we get through some permitting. I'm just trying to read. Yeah, we would definitely like to get a little bit more at the end of March is the end of our quarter, so we will be coming out with quarterly results around that time. And the resource at the moment has defined, it's within the overall resource. The 4447 is not a new resource at this stage. It's within the 4447. So unfortunately, that's all I have time for today. So I want to thank everybody. And remember, I am available for more one-to-one meetings, and I would ask people to reach out and I can set them up if people want to go.